You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. It is time to roll out episode 2 of everyone's favorite bi-weekly options extravaganza. Yes, I'm talking about the old OB. My name, of course, is Mark Longo from theoptionsinsider.com. Reminding you right here at the top of the show, if you want to check out the pro Q&A we did earlier this week with Mr. Scott Nations, you want to check out Options Oddities after Vol Views, you want to get your name in the hat to win a fabulous pro trading crate, just like our member did, Joe Lewis, this week. Congratulations to you. Only one place to go to do all that. Get access to the live, have some fun. Of course, get some early access to other content as well. Your own podcast feed, theoptionsinsider.com/pro is the place to go to learn more about all that fun as we learn who's joining us for a whole bunch of fun on the show today. Man, it is popping off yet again. I hope you're strapped in, listeners, as we go around the horn first to the hallowed halls of SIBO East, where we are joined once again by the Flowmaster, a.k.a. Mr. Henry Schwartz from SIBO Global Markets. Mr. Flowmaster, welcome back to the show. What did you do to the market, sir? I think you broke it.
Well, it's just like the weather in Chicago, right? You just if you don't like it, just wait a day or two. We're kind of in crisis mode. VIX is over to touch 25 just about 5 minutes ago, and I pulled some data just on kind of where we've come from in going back to the all-time highs that the S&P set on February 19th, and it's some pretty serious movers, right? You know, we've seen things like, NVIDIA down almost 20% off that top. SPX, I think, is down about 6 points off the top. VIX is up from 15 to 25. So, these are the kind of crisis dynamics that the traders kind of wait around for, and then we all kind of hope that we weren't caught offsides or really overextended, right? This is where risk management and just kind of not taking risks that you shouldn't be taking comes into play. So, we've seen, I was just trying to look back and see when the last time we had volume under 50 million contracts was. It's been definitely more than 2 weeks. And, volume is on fire. The 0-day option on volume has also really been holding up very strongly, like well over 55% of the total volume in SPX, even in these really volatile times. So it's kind of interesting because we know that a good chunk of that volume is kind of premium sellers, the Condor selling community. And on August 5th, for example, we saw them actually not trade very much that day. So even though it was a really busy day, because we were down so sharply overnight that weekend, they really stayed away. But we're continuing to see people trade through this, which I think, one thing that shows you is that even though we're getting some big swings and, a lot of them to the downside, the liquidity is still out there. People are still able to trade through it. So it's definitely interesting times. A lot of opportunity for people that are equipped to look for it, that kind of have the knowledge and the approach to take advantage of this kind of market environment. Is great, but it's stressful. I'm not going to lie. It's painful to see, the market cap for the S&P go, down 5, 6, 7% over a few weeks, because that does tend to hurt most people, and in their retirement funds and everything else.
Wow, that was a heck of a welcome to the show, sir. Hope you saved some. Hope you saved some for the trading block. As we also welcome on the uncleist of Mikes, Mr. Uncle Mike Tosaw. Do you have an equally epic welcome to the show, sir?
I was just going to say, great to be here.
Henry's all done. He's going to sign off now. He's good for the show. All right. With everybody assembled and all of our data already out, let's get right to the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. And we always like it when the Flowmaster is excited. He just can't contain himself. He's got to get the data out. So we got to get the flow out, listeners. That's why we call him the Flowmaster. All right, let's break down what the heck is lighting up our tapes right now, even though Henry gave you a good snapshot already. And as we joke a lot here on the network, if you don't like what's going on in these markets, especially right now, literally just wait 5 minutes. Chances are we'll be 25 handles away in the S&P. Right now, it seems like the bears have the bit in their teeth. But yet again, even today, intraday, we had some swings. We started selling off first thing out of the gate, right around 57.5 or so. Then we rallied. North of 5,800 again, all the way up to about 58.10. Then they came right back in and cut the legs out of the market again, selling off about 70 to 80 handles in the S&P. So that puts us down right around 57.30 as we're kicking off the show. It's like we got even lower. We got down to about 57.25 or so. So wild time out there right now. As we're kicking off the show proper, listeners, S&P off nearly 2%, about 1.9%. Dow off about 1.25%. NASDAQ closing in on 2.5% to the dark side. And lest we forget our old pal small caps, off about 1.75% as well. So things are popping. Things are looking spicy out there. Right as we kicked off the show, VIX cash was pretty much at the high for the day, 25.25. So looking pretty spicy, up not quite 5 handles, but pretty darn close to it from the last show, about 4.6 handles. It's back to about a 25 even. I say back to about 25 in air quotes because 25 obviously still lofty. 25, if you listen to Vol Views, listeners, is our demarcation for the danger zone. So we might have to pop off a little bit of logins on the show tomorrow. Copyright be damned if we're still hanging out in this level by tomorrow. So yeah, all you logins lovers who were writing in asking for it when we were down at 21.22, it's not appropriate at 21.22. 25, All right, now we're talking a little bit of logins. VVIX also looking frothy, looking, dare I say it, logins-esque. 120 as we kicked off the show, up a whopping 12 points from where we were this time just on Monday, actually, not even last week, just on Monday. So, yeah, a wild week. Of course, since our show on Monday, listeners, we've done a lot of rally and then sell off and then fade and then rally. It's been dizzying, to say the least, out there, the number of intraday whipsaws we've had just since the Monday show. Then, of course, yesterday, on the heels of potentially a bit of a détente in the growing trade war, we saw markets rallying pretty hard, getting well north of the 5,800 level in the S&P. Uncle Mike and his Facebook cabal were celebrating, and then right back down again today. Though, I said earlier, even earlier today, we tried to rally it again. So who knows? Wait 5 minutes, the bulls could get back in, start goring this market all the way back up to 58.5 again by the end of the show. Who knows? Wild times out here, listeners. Strap in. It's going to be a fun one. Let's go out now to the uncleist of Mike's, who once again is shedding a tear. I think he has a box of Kleenex by his monitor as we speak. Mr. Uncle Mike, sir, a wild couple of days since the Monday show, an equally wild session shaping up right now. What's been catching your eye out there, sir?
Well, what's been catching my eye is just the intraday movement with which we've had. I don't know. It just seems to me that these pullbacks that we've had, or the market movement that we've had so far in 2025, has been a lot of intraday movement. So that's one thing that's catching my eye. The big thing that's catching my eye right now is when President Trump talks about tariffs. And Trump version 1 in the first term, the way with which it sure seemed like to me it would happen is that, we are going to put on a lot of tariffs. Market gets clobbered. Trump sees that. Trump does not like having the markets get clobbered. He would reply with something along the lines of, well, maybe we're not going to do quite that many tariffs. Market would rally. It was an amazing, fun trading market just for those types of things. And then COVID came along, and then that was not fun. Now, in Trump version 2.0, what's going to be interesting is that he's talking tough on tariffs right now. However, in his speech the other night, instead of saying, we're going to back out on tariffs, or something like that, he just said, things are going to be kind of rough for a while, and for the short term, because we got to get these tariffs in place. So I'm not sure if he's going to back down on tariffs this time around. So it's going to be interesting to see if Trump version 2.0 is going to follow through on as much tough tariff talk as he initially talks about. Now, obviously, the man likes his tariffs, but is he using this as a continued negotiating tool right now, or is he going to follow through on them? That's something that's really catching my eye quite a bit, that I'm watching rather closely. Now, another thing that's catching my eye is that on a day where the market is getting clobbered as it is, what's interesting to me is that one of the stocks that typically leads the market, or has led the market in years past, it's very boring on the day, and that's the fruit company Apple. Apple's only down 50 cents on the day right now, and it's something to where maybe we are looking at kind of a flight to quality type of thing in the marketplace, just because of the fact that such a behemoth like Apple is not moving very much. Now, what is moving quite a bit, the market as a whole in general, but we're having a day to where NVIDIA is down almost 5%. Netflix is down over 6% on the day. Meta, the stock formerly known as Facebook, is down 3.5% on the day. Tesla is down over 5% on the day. So we have a lot of things that are going down, but a lot of it is just kind of isolated to the stocks that were what I would designate anyway as the high flyers. So the high flyers bring the market up. The high flyers are bringing the market down. So we're having a lot of movement along those lines. So there's a lot to look at right now. But the final thing that I want to mention before I turn it back over to you, Mark, is the fact that we're not getting a rally in bonds right now. Just looking at IEF, that's down 5 cents on the day right now. So we're not necessarily getting a massive flight to quality. Now, the good news is that for the people that don't want bonds to go down, if you will, the good news is that they're not going down right now. And we're not getting one of those days to where both stocks and bonds are going down because of fear of inflation. I think the fear or the reason why the markets are going down is just because the stocks are going down. Back to you, Mark.
All right. Let's now go back to the hallowed halls of SIBO East. Let's see if he's got any bullets left in the chamber, listeners, or if he fired them all off as soon as the show started. He couldn't contain himself. Our chat's enjoying it. They're saying, "Oh, the Flowmaster, he couldn't contain himself." So yeah, they're having a laugh, a chuckle at your expense, Mr. Flowmaster. But they appreciate it nonetheless. That said, anything else catching your eye out there today and this week, Mr. Flowmaster?
Well, I mean, I agree with what Mike said. This is really all about tariffs. That's what kind of everybody's watching and, trying to make sense of how real they are. Is this basically, I mean, some of the conversations I've had with my colleagues has really been, okay, so far these tariff, the tariff threats, which are now actual tariffs, have been viewed as like, okay, these are going to hurt some stocks, but it's actually going to help some other stocks. So it's really been a stock specific kind of market dynamic. And although the S&P's gone down, we haven't seen the big spike in volatility. We haven't seen correlation pick up. It's not that every stock is going down. And Mike pointed out that that Apple's relatively flat. I think Intel's actually up a penny or two on the day. So that's kind of the way things have gone. However, that really has deteriorated. And I was just talking with Mandy Zhu yesterday. And she said, now the question is kind of like, well, is this going to get us into a recession? And, so once that, that's a much more broad market problem. So, that's why we've kind of finally seen, the VIX really spike. Is the concern is really picking up that this is a bigger problem than just kind of impacting certain stocks or certain industries. So, but I am very excited. I mean, when the stuff really starts to hit the fan, that's when in the options world, we like to see, you see all sorts of interesting things. You see a lot of opportunities open up. You just see kind of, some of the leverage effect of options. I was watching some trade Friday, right? That's when we bounced off of the Zelensky conversation lows and ended up on the day, and S&P ran about 100 handles. I watched some calls go from about 18 cents, because that was late in the day, to about $8. So that was in S&P. So the kind of the potential for big value changes and moves, it all gets really exciting when we have some of these big days. So it's times like this that it's really, options really show their worth and how they let people do trades that you could just never really do in the market, and if you only had access to equities or even futures.
All right, let's look at some of those big moves and see what kind of paper is popping off. If you just looked at VIX today, you'd say, things are robust, but maybe not exploding. Coming into the start of the show, we were barely north of 500,000 contracts. Now, that's pretty decent when we see that the ADV has ticked up exactly 100,000 contracts since the Monday show to 903. But that said, maybe a day like today, you might expect a little bit more paper out of the gate, which maybe also shows that the market, the traders, starting to get a little bit used to these aggressive body blows, then equally aggressive ripsaws to the upside. We're not putting up 1 million plus contracts the second the S&P turns red like we used to just a few weeks ago out here. So kind of interesting. Only in air quotes, 585 on the tape in VIX land. That said, the big dog out there right now, 62,000 of the March 19 puts, listeners, including a big block that traded 30,000 for 55 cents. Kind of interesting. These are traditional March expiring on the 18th, which makes me wonder, are you folks a buyer at that level? Are you a seller? Are you just hands off at that level? Kind of intriguing. Maybe we'll put that out for a flash poll, see what you folks have to say in a little bit. Number 2 today, we have the March 18 puts right behind it, 31,000. Number 3, about 28,000, almost 29,000 of the March 20 puts. So a put palooza out there this morning. Maybe not what you expected maybe some people looking for some aggressive reversion, which if past his prologue has actually kind of worked out. You just got to get the heck out of Dodge and before the next upswing kicks in and kills you again. But intriguing stuff nonetheless. Let's go really quickly. Yeah, I think we do. We do have that live already. Our producers are quick on the trigger finger, listeners. And right now, 71.4% of you want to buy those puts, 14.3% want to sell them, and about 14% say you're just not interested at that price level. So yeah, a lot of buyers out here. A lot of buyers of the March 19 puts going out on the 18th. Kind of interesting. Is SPY also rocketing out of the gate today? SPY, definitely. If you looked at SPY right now, you looked at VIX, telling you two different stories out here. SPY, 7.75 million contracts. So not quite 2x what we expect this time of the show, but fully about 3.5 million contracts above it. So closing in on that, whereas VIX is kind of about where we expect it to be, maybe a little heavy. So again, tale of two tapes out there. SPY just putting up all the paper out there right now. Listeners, let's look just for fun. Let's do our traditional. In fact, as I was talking, listeners, it just ticked. It is now 8.02 million out there. So there, you can almost say it is pretty much. We had many days when it's been around 4 million this time of the show. So it is close to 2x right now. Let's look really quickly. You know what? All 20 for 20. 0 day, which is kind of getting to a point that Scott Nations made on our Pro Q&A earlier this week. You know, back on August 5th, the first big meltdown, the first big shock, really, in the modern 0 DTE era, we saw 0 DTE paper kind of dry up for obvious reasons. These days, as we're getting body blow after body blow after body blow, we're not seeing it as much anymore. Kind of getting back to what I was saying earlier. The market a little bit more used to this now. The 0 DTE crowd has a few more notches under the belt. They can withstand a few whipsaws out there. As a result, we're 20 for 20 again. Even on a day when the S&P, the spider, is 2x nearly, it's 20 for 20. 0 day, including the big dog, 320,000 of the 580 calls. Again, we're at 574 right now, listeners. So interesting stuff afoot out here. Obviously rallying a little bit since we kicked off the show. So maybe a little bit of we were down at 57.25 right before showtime. So yeah, a bit in the bull's teeth. Are they going to rally it more? We'll see. But yeah, SPY over 8 million. Is the S following suit? It'd be a weird day if it wasn't, listeners. The S well over 2 million. Yeah, about 2.3 million on the tape right now. So that's about over 500,000, about 0.6 600,000 to be precise. Contracts above where we expect it to be, listeners. The ADV, 3.55 million out there. Tell you what, you want me to be even Steven? I will be even Steven for you, listeners. Are we 20 for 20 in the SPX? The answer is yes. Everything going away today. The big dog, 55,000 of the 5,700 puts. That one's interesting because if you've been paying attention to the market the last few sessions, you know we've never really threatened 5,700. Got down to 57.30, 57, almost 57 and a quarter, but 5,700 haven't quite gotten there. It's like somebody bought some this morning for $6 and some others traded $8, 7.35. My goodness, these are a lot of buys, listeners, not just people writing. Wow, they've had a range of about $8 to about $2. Okay, well, oh no, they traded almost $10 one block, $9.99. Ooh, man, that's a spicy meatball if you paid $10. Where was the S&P was at 57.34 when they traded those. So it was about the closest we've gotten today. Man, $10 for those bad boys. More power to you, sir or madam. But the S, 2.3 million. Small caps, not to be forgotten, 1.15 million on the tape. The ADV about 1.5, so we're going to get there probably by the end of the show. And the Qs leading the dance as they are wont to do these days. 3.6 million contracts. Usually we expect about 2.25, 2.2 million. So talking about 1.4, 1.35 million additional contracts on the tape in the Qs right now. So that's pretty spicy. The ADV almost 4.5 million. Probably be pretty close to that by the end of the show. All right, out to the land of single names we go. Sometimes in these wild, woolly markets that are very macro driven, single names are the land that time forgot. Is that the case today? The answer is no. They're respectable. 295, not quite breaking into the north of 350 level, which I would term kind of pretty action-packed, certainly not kissing the 425, 450, 460 we've seen not that long ago in the past, but 295, dare I say it, respectable. That gets us to Marvell. Haven't seen Marvell on this board in a while, and given today's action, may not see it again for a while. 74 and a third, off nearly $16 or 17.5% on what they term tepid sales guidance. Yeah, that'll do it. Any sort of tepid guidance is going to crush the stock. Obviously, it's a rough time for semi-names in the U.S. in general, so piling on some tepid guidance, that's going to get you to the number 10 spot, off 17.5% for number 10. Number 9, good old Baba, now the next Chinese AI stalwart out there, 139.90, off about $1.10, about 0.8%. What fun is it just being an e-commerce giant when you can also be an AI giant? So they're tilting that windmill. So they have their own rival to OpenAI and indeed to DeepSeek. So Chinese AI names kind of slugging at each other right now, which is kind of fun. The stock popped hard this morning, up to about 144 3/4, and then they're crushing it back down. Got as low as 138 1/3. So Alibaba not immune to the macro winds that are sucking everything down out there. Kind of getting to what Henry was saying earlier. Now we're starting to see that correlation start moving towards one. The black hole that is sucking down the market, starting to suck down everything, including even the names that dare to whisper the magical letters of AI, listeners, like Alibaba. Number 9 today, 334. How's that for a tale, listeners? Who else is going to spin you a yarn like that about a name on the top 10 list? Number 8, AVGO, 180.95, off 1065, or about 5.5%. So they are coming for AVGO today as well. So I guess they want AVGO to go away. Number 8, 358 on the tape. I promise not many more bad puns like that. Number 7, good old SMCI, 36.90, off $2 exactly, or a little over 5%. They've had exactly a $4 range, 39.66 to the upside, 35.66 to the downside. 36.79 is where they're hanging out right now, towards the lower end of that range. Number 7, SMCI. Number 6, the Amazonians. If Baba's coming down, Amazon's got to go too. 201 1/3, off $7 exactly, or about 3 1/3%. They've had a range of 205 3/4 to the upside, 200 double to the downside, so just slightly off their low for the day right now. Number 6, the Amazonians, 375. So all the way at number 6, so only at 375. So again, not a banger day from a volume perspective, at least the single names. Number 5. I'm jumping around here. I jumped all the way past number 5. Let's pull up the actual number 5. Then we'll get to what I had there at number 3 for some reason. There we go. All right. Number 5 is good old Palantir. Roaring back to life yesterday, getting up to about almost $90. Where did they get? They got to 90.85 yesterday, and then coming right back down the other side, $7.5 today, or 8.25%, trading 82.69. So if you're saying, man, I missed them at 80 just a few days ago, they got to 80 1/3 on Tuesday. Well, here you go. Right back at it again. It's one of those markets, listeners. Just wait 5 minutes, or in this case, a day or two, and you're good to go out here. Palantir, number 5, lighting up the tape to the downside with 511,000 contracts out here. Let's get to number 4. Uncle Mike was just talking about them, the fruit company. Apple, 535 on the tape for them, 234 and about a half, off about $1.20, or literally 0.5%. So had a range of 233.5 to the downside, 237.86 to the upside. So hanging out towards the lower end of that range, but nearly $1 off their lows. Kind of interesting day. Apple has resisted the sell-off better than most of the Mag 7 right now. You'll see when we get to the top of our list, talk about some sell-offs. But yeah, fruit company still hanging out north of 234 right now. Good for number 4. 535 on the tape. Number 3, the monster, not looking as monstrous right now. 302.5, off $6, or about 2%. Let's see, on the last month, they're off 7%, or $23. And year to date, they're still, after the rally they had, they got down to 240 just a few weeks ago. Since then, they've actually managed to rally about 60-odd bucks. So they're net back to pretty much flat, up slightly, about $4 on the year right now. But they were down for the year not too long ago. So MicroStrategy, it's been a wild time out here. Of course, we were talking about that on our Crypto Rundown show, about the strategic crypto reserve. That is the subject of our question of the week, so get out there and make your voice heard on that. Number 3, the monster. Number 2, it's Tesla, also looking a lot less monstrous. Man, maybe Musk rethinking some of his political activities. Obviously, there's other things dragging down the stock, listeners, like the fact that they don't make a lot of money selling EVs, problems in China, all kinds of other things. You can only subsist on Bitcoin returns and carbon credits for so long. But still, political headwinds probably accounting for at least some of this sell-off out there as well. Either way, whatever you think, stocks taking a drubbing, 263 and a quarter, off nearly $16, another 5.7% today. Year to date, they are now down 116 handles, or about 31%. From their high, they are down from, let's see, they kicked off the year at 379. They rallied almost another 50 handles from there. They got up to about 428. So tack another about $50 onto that. So yeah, it's a rough one. They've actually sold off almost 100 and almost 170 handles from there. So wow, that's a rough go out here. Number 2, Tesla. So much so, listeners, I saw some of the first Tesla catastrophe puts lighting up my tape that I've seen in years. We used to talk about those all the time. The 1 puts, the 10 puts, back when Tesla was around $100 pre-split. I've started to see some. They're a little bit higher now. They're 50 strike and 20 strike, but still starting to see those in the offing again. Haven't seen those in forever. And then number 1, the big dog, it's NVIDIA, looking a lot smaller today, 111.80, off $5.50. Everyone was saying, man, I missed it last time. It bounced down to about 116 in about exactly a month ago, early February. Well, now here you are, listeners, 111. And over the last 6 months, they are now only up about $9, which is still about almost 9%. And you go back the last calendar year, they're up still about 23 handles, or about 26%, but obviously they've given back a lot of that. A year to date now, they are off nearly 20%, about 19%, so a rough run. And of course, from their peak on the year, they're obviously off a lot more. So intriguing stuff. NVIDIA bearing the brunt of a lot of this potential trade war talk out here. NVIDIA, number 1, 2.86 million contracts on the tape. On the earnings front, we had a spicy week this week. Tuesday, Target, Best Buy, Nordstrom, Ross, Uncle Mike's favorite fashion outlet, and then ChargePoint, a name we've joked about a few times on Options Oddities. They had some wild paper there for a while. Wednesday, Abercrombie, Foot Locker, Marvell, Victoria's Secret. So a lot of clothing retail and just in general retail this week. Thursday, Cracker Barrel. You like a good bit of fried chicken in the country. Crackle Barrel is your Huckleberry. Kroger, BJ's, and then Macy's and Broadcom and Costco today as well. And because we like you folks, hot off the presses from our friends over there at Orats, we got some updated earnings move results and earnings season reports. Let's go out to Kroger. We don't talk supermarkets that often. There were 6 before the bell. So that would be obviously this morning before the bell. 62.5 is where they were going into their announcement. They were pricing in 5.2%. They had delivered as of showtime, or as of this report, I should say, about 4.7%, but they have since petered out. They rallied up to 65.5, so they were pretty much gone exactly in line with their straddle, right around 5%. And now they've given most of that up. They're only up about 1.5%. So again, that big sucking sound, what Henry was saying earlier, sucking all the names back down, including Kroger. A rough day to have decent earnings because, yeah, better than expected earnings, but doesn't matter. The sucking sound overwhelms it all. We talked earlier about Marvell just getting the rug pulled out from under them. They were at $90 and change when they went into their announcement. They were 74.75 when we ran this report. They are now 74 even, so they have outperformed. They are off 18%. They're only pricing in about 11%. Let's go to Macy's was another one popping off today, and they also had an interesting run here. Soft guidance. So you think that would hurt them, but they've actually, let's see, they were 13.31 going into their announcement. They're 13.32 right now. So they have moved literally a penny. They were pricing in 8.3%. So Macy's might be the premium seller darling of the bunch right now. They have done literally nothing, even though they had a range, about $1 range, $12.60 to the downside, $13.63 to the upside. So you had to sweat a little bit, but not much. And Macy's, a gift to the premium harvesters out there right now. Let's look really quickly at something popping off after the bell. Let's go out to Costco. Let's see what's going on in big box wholesale. 1,026 3/4. So where they are right now, they're actually selling off. They were 1,047 3/4 when we ran this report just a little while ago. So they've sold off, a good 21 handles since then. My goodness. They were pricing in $39.80. In the past, they've moved 26 1/3. So they're pricing in a hell of a lot of juice, but good news, they've already moved about $22. 21 and change now. They continue to sell off. So yeah, there you go. You already got almost half of that, a little over half of that straddle already just today. So there you go, listeners. Let's do one more just for fun. Kind of the traditional tail end of the earnings season is Oracle. They're popping off on the 10th. 161.5 is where they were trading when we ran this report. They were pricing in 13 1/4. In the past, they moved 11.68, but guess what? They've already sold off 10 handles since we ran this report. They were 161.56. They are now 151.66. So $9.90, listeners. My goodness. Man, they're coming for everything today, including Oracle. You can see all this for yourselves and a whole bunch more. There are literally hundreds of tickers here. We could spend many shows talking about them. Go check them out for yourselves. Right now, the season's still a banger, hanging out at 122%. Right now, our long-term average, 117%. So once again, looks like this cycle is going to outperform our long-term average, which means premium buyers outside of Macy's are having a hell of a cycle out there. Wow. Speaking of having a hell of a good time, let's keep the party rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, time to get weird, time to get wild, time to unleash the Flowmaster even more than he unleashed himself at the start of the show. Let's kick things off with a newcomer. If you're saying to yourself, you're always talking tech and you're always talking, pharma and biotech, vol and everything else out there. But really what I want to know about right now is sandal and footwear volatility. Well, you know what? Our first victim has you covered. It's Birkenstock Holdings PLC, ticker symbol BIRK, B-I-R-K. I can't recall, maybe we've talked about this once or twice in the 18-year history of the network, but I'm hard-pressed to think of the last time we did. Trading $47.50 off about a quarter today, so seemingly immune to the massive sucking sound, at least for right now. That said, they are off their high. They got up to 48 1/3, so they've had a little bit more upside. They got taken away today out here, listeners. On the year, you might be asking yourself, what has gone on in the realm of sandals and footwear? And a year ago, they were $48.19. So it's like this last year was the year that time forgot. They're almost literally unched off about 60 odd cents. They sold it off in April to about $41. And then they rallied it hard August 23rd. So when the rest of the market was getting killed, they were rallying all the way up to the end of August, $63.50. It looks like actually they topped out at 64 3/4. Then they fell off a cliff, not on August 5th, but on September 10th. They clipped them from about $64 down to almost 65, down to 43.88 on September 10th. So bad earnings, something along those lines. They tried to rally it in October to $51, and they faded again back to about 44 on November 13th. So again, while the rest of the market was rallying post-election day, Birkenstock stock selling off. Then they bounced again on November 14th, another big rally from $44 all the way back up to about 62, 63 on January 30th. And then ever since then, it's been right back down again to about where we are right now, 47, tickling 46 and change this morning. That said, Mr. Flowmaster, what spotted the eye of the Flowmaster in the realm of sandal flow, sir?
Yeah, I've never really looked at this name very closely, but I did notice a trade. And then when I started digging around, it got a little bit more interesting. So Birkenstock's, it's not the most active name. I think it averages about 4,000 contracts a day. And so the first trade that jumped out at me today was the 4,000 out of the March 50 calls, traded for $1.02. That was just before lunchtime when the stock was at 47.81. So that's a 2-week trade. It's kind of chunky out of the money. It's about a 45 vol. And then when I actually dug into the flow, it actually looks like a little bit later there was actually a flex trade. Some of the March 52.5 calls, almost the same size, traded for like 37 cents. And that looks like a closer. So what I think this is happening is this trader is rolling down some long calls from a flex into the March 50s. So a bullish position. And even though the stock has gotten hurt, they seem to be kind of, renewing that position. But then one other thing that I looked at is, yesterday's flow was really kind of similar. So today we're looking at a 9,000 calls versus 90 puts. Okay, so very, very high call to put ratio. Yesterday was actually kind of similar. It was 6,000 calls versus just 60 puts. Actually super duper similar in terms of the numbers. And yesterday was also an adjustment of a long call position. So yesterday's trade was the March 50-55 call spread trading on a ratio of 1/2. And in that case, we can kind of see, because the open interest is cleared, that was actually a seller of the March 55s 4,000 times closing, and they were buying the March 50 calls for $1. That's when stock was 47.59. So about where it is today anyway. So this tells me somebody's really kind of looking for the stock to rebound. I don't know much about Birkenstock. I see this in ADR. I don't even know where they're based, but position of 7, 8, 9,000 calls. I assume it's kind of the same trader. It only trades 1,600,000 shares a day, so it's pretty substantial position in notional terms. It might be worth kind of some sort of a long lean in the stock one way or another.
Look at this chart. It doesn't scream to me that I want to sling a whole bunch of options on this name, but I guess it also it can be prone to a few whips here or there. So as long as you're deft on the trigger finger, listeners, you don't ride these things to oblivion. I guess you could have an interesting time. It is net kind of unched right now, but it has had some swings in between there. So there you go, listeners. Do those excite you? The Birkenstock, a little bit of upside in Birkenstock, in particular the 50s for about $1. As we keep on rolling, let's keep the excitement going in, shall we say, less sexy international names, huh? Let's go out to our old pal Deutsche Bank, ticker symbol DB, trading 23 3/4, off about a dime today. So not exactly lighting the world on fire today. On the year, though, pretty good chart. I think the folks at Birkenstock would kill for this chart. They're up 73%. Or a little over $10 on the year. They were 13.68 last year. And it's been mostly straight up. You had a couple of head fakes, like obviously August 5th and 6th, when they sold off from about 17 down to about 14. But they turned right back around. By August 20th, again, they were back around $17. So then they just kept climbing from there. And a nice leg up over the last just couple of sessions this week. This week, they're up 11%, or almost 3 handles. So yeah, it's a good little run here for good old Deutsche Bank. And Mr. Flowmaster, what did you spot out there in the hallowed halls of DB, sir?
Yeah, before their U.S. Bank shut down, we used to have clients over there, so I spent plenty of time on their trading floor. It was down on Wall Street, towards the seaport end of things. But yeah, I mean, this kind of they had plenty of troubles. Shut down the U.S., but the stock right now is kind of flat, but the story this year, okay, U.S. markets really are struggling, right? We're down on the year, and Nasdaq's down a pretty good chunk, almost 6% year to date. The European markets, though, are all up double digits. So the DAX, I'm showing up almost 17% year to date, and this all, a lot of this is coming out of kind of this big reshuffle with, the U.S. And Trump policies basically forcing the European countries to spend more on defense, which means it's great for the defense companies. And so, that's kind of where, we're kind of changing how things have been for the last couple of years. The trade that caught my eye today was the April 25 calls. So just kind of a simple little one, stock like around $24. And what we see, actually, this was on this morning's trade of the day. So this was yesterday's trade. A buyer of 2,000 of the April 25 calls, 55 cents. Opening, I believe they closed almost double that. So it was a big, they paid 55 cents. They closed 94 cents. So just on that one little trade, they were up about $85,000. That's a 70% return. And then when I looked at the, kind of all of the open interest changes, there's opening in the April 20 calls, the March 23 calls, April 25 calls. So there seems to be a bunch of strikes kind of net opened. And then if you look at what's going on today, 23,000 calls versus just under 10,000 puts. So it's almost 6 times the average daily volume. Most active is the April 20s again. So, these are some in the money. I think there's probably a little bit of back and forth trading going on. Just because it's been such a it's been such a strong name, so people probably kind of riding it and then taking some gains. And actually, these April 20 calls today looks like a seller about 5,000 for 455. I would imagine those are probably closing. Somebody that got into them lower, and in fact, it looks like they traded end of March around $1. So that's a nice trade if they rode them from $1 up to $4. So again, this some of these big themes we've been hearing and talking about are the kind of the end or pause of U.S. exceptionalism, which has been this dramatic outperformance of U.S. markets versus the rest of the world over the last few years. Obviously the new administration is shaking things up, and maybe it's kind of, I think a lot of people feel like the U.S. bull market could be a little tired, and some of these other markets are actually getting set up to do pretty well.
Speaking of setting us up to do well, you folks always do that with your questions and comments. Let's get to them now. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Let me really quickly pay off some of the questions that we were debating with you folks last week. We asked you last week, hey, 24-hour trading back in the headlines, which raises the question, should options trade around the clock? Heck yes, heck no, or forget 24/5, I want 24/7. Heck no took it, but just barely with 45.1%. Heck yes, coming in number 2, 39.2%. That means number 3, full-on 24/7 trading, nearly 16%, 15.7% of you. So if you add those two together, obviously you're talking 55% of you, obviously over half. Definitely want full 24-hour trading, 24/5, and then a chunk of crazies want 24/7. You want to sling that NVIDIA on 2 a.m. on a Saturday. I feel you. I feel you out there. And then also we asked you last week, gun to your head, if you had to buy and hold one crypto asset for the rest of the year, which one are you choosing? And 67.9% of you chose Bitcoin, 13.6% went Solana, 11.1% for ETH, and 7.4% for others, write-ins for Doge, and I think a bunch of them, Cardano, you name them out there. Too many to list out here right now. This week, we have a couple of questions coming at you right now, including our poll question list that just went live right before showtime, or actually right during showtime, where we asked you, here we are, those March 19 puts expiring on the 18th, and VIX trading for 55 cents. Are you a buyer? Are you a seller or not interested? Right now, nearly 70% of you, 68.8%, want to buy those bad boys. 18.8% want to sell them. 12.5% not interested. That'll be running through the end of the day, so you folks listening to the podcast can make your voice heard as well. Our actual questions of the week are twofold this week, listeners. First off, going back to VIX, we said, yeah, we're seeing a little spice in the market right now. Obviously, even spicier since we posted this on Monday. Do you think this has legs, or is it just a dust-up? Quite simply, where's VIX going to close at the end of March? Is it going to be spicy, so north of 20, where it's hanging out right now, a little bit more mild, below 20, or this is too spicy for you, you're going to cash? And then alongside of that, we also have a crypto question running right now, which Uncle Mike is a big fan of. And we're asking you quite simply, do we need a strategic crypto reserve? Heck yes, or heck no. Uncle Mike, the floor is yours. You get to weigh in on both of those. The strategic crypto reserve. I know where you probably hang your hat on that, but where do you think our audience is hanging their hats? And then B, where's VIX going to close at the end of March? Spicy or a little bit more mild, or you're just heading to cash?
I think that the audience does want a strategic reserve for Bitcoin. I do not. In terms of where I think the VIX is going to close, the VIX has been interesting these last couple days in that with the S&P down 1.8% on the day today, the VIX is only up 12% right now. So I'm not the VIX person. I would yield to my co-host on that, but I would think the VIX should be moving more, and that makes me think that it's not going to move that much more. So I'm going to say that the VIX will be, I'm going to go back at I'll say 18.76.
Oh, so maybe you might want to be a buyer of those puts then out there.
Yes.
Interesting. Mr. Flowmaster, same two questions for you. Well, I guess third, if you want to weigh in on those puts, if you like them or not. March 19 puts for 55 cents. And then B, the contentious issue of the day right now, do we need a strategic, easy for me to say, strategic crypto reserve? Heck yes or hell no. And then also, where do you think VIX is going out at the end of the month? North of 20, below 20, or you're going to cash?
So I'll go backwards. VIX, I think under 20, but our prediction for the year is kind of things to kind of bounce around 18. So I would think by the end of the year, things will have settled down a little bit in terms of what's going on with these tariffs and with the economy. So I'd say below 20. Strategic crypto reserve seems completely wacky to me, so I'm not a big fan of that. And I forgot the last question. The first question.
You like those March 19 puts in VIX for 55 cents?
No, I think it's going to stay kind of rocky until we get into the summer. So I don't want any of those.
All the way into the summer. All right. So sold to you, says the Flowmaster. Right now, updated numbers, 57.9% want to buy those puts. 26.3% now not liking them or just not interested. And then 15.8% want to sell them. In terms of our strategic crypto reserve, you folks are on the Flowmaster and Uncle Mike's side. By exactly 2/3 of you, 66.7% saying hell no, only 33.3% saying heck yes. So a lot of our audience saying, I don't see why we need a strategic. Why do we need to buy all that BTC and ADA and everything else? And then right now our poll's whipping all over the place for the VIX. It's ticking. I could take a snapshot. I'll freeze it right now so I could see what the results are, listeners. 51.4% of you right now saying it's going to be mild below 20. 45.7% saying it's going to be spicy north of 20, and 2.9% of you want to head out into cash. This is too spicy. You're taking your ball and going home. So our audience, obviously very evenly split. Get over there at options, listeners, and you too can be the deciding, easy for me to say, the deciding vote. Before we get out of here really quick, this came in during our show last week, Mr. Flowmaster, and it kind of brought a chuckle to my face. As you recall, on the show, we were talking about that funky VIX super stupid on the show last week. It was, 6 or 7 legs of all the upside strikes. I believe it was in May in VIX, and we had a good time talking about it on the show. We had a listener chime in while we were listening to it, and he put in a fun little, I guess you can call it a political cartoon. Well, not really a political cartoon, just a cartoon. And it's a couple listeners, and they're looking down at their dog. And the dog is kind of slumped on the ground, but the dog has VIX written on it. So obviously the dog is VIX. And the woman is saying he only bites sometimes. So there you go, Mr. Flowmaster. Our audience is saying that VIX stupid. Maybe somebody's setting up for a little bit of a VIX biting spree, which seems like we're starting to get some of that, sir. What do you think?
Well, that really was an interesting trade, right? We actually dug back in the data to figure out how much of a standout it was, and we haven't seen a buyer of kind of that size, especially those high strikes, in years. I actually wrote a little script to try to track the P&L. I believe they're up a couple $1 million on the trade, so it is a race against the clock. I mean, the 55, 60, 65, 70, 75 strikes. I think most of us know the highest close in the VIX has been in the low 80s only twice in forever. So those strikes are pretty high, but it wouldn't take much for them to kind of double their money or even triple their money. So I'm watching it. There was some additional trading in it yesterday. They did not seem to be getting out. We saw some firm to firm activity. And a couple other big blocks today in VIX. So it's definitely, these kind of market conditions are great for the big VIX trading community. today it's what was the biggest strike? Yeah, we're actually seeing some puts. Two of the those 18 and 19 puts, which as you've mentioned, once VIX does get kind of high, sometimes the put traders come out. Usually though, it's much heavily call concentrated.
All right, listeners, now it's time to keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, coming into the end of the show, we're seeing S&P right around 57.30, so off nearly 2%, still about 1.92%. NASDAQ off 2.5%, and Dow off about 1.25%. So not that dissimilar from where we started the show. VIX cash at about 25.25 or so. So haven't whipsawed a ton since the start of the show, which is kind of fascinating. As we go around the horn, Mr. Uncle Mike, sir, what are you keeping an eye on until the Monday episode?
Watching to see the 6,000 magnet in the S&P, seeing if the 6,000 magnet can pull it back. Watching the non-movement in bonds as of now, seeing if we can get something one way or another. And then also looking at Microsoft. 400, I think, is kind of a key number for Microsoft. It's acted as support, and wanting to see if it can stay close to that in these volatile times.
I think you meant the 5,000 magnet. That's right. That's what we're getting sucked towards, right? That's what you meant to say out there? It's okay. I understand.
Yeah, that's what the Bears are saying.
Oh, the 3,000 magnet? You sound like, now I'm going to sound like Mr.
Now, the 2,000 magnet, that was a legit magnet for a long time on this show, I remember.
Now I'm starting to sound like Mr. Matt on our advisor show. Mr. Flowmaster, same question for you, sir. What are you keeping an eye on until your next appearance next Thursday?
Well, I'll be watching the macro picture. I want to remind people that, volatility cuts both ways. So, it's easy to kind of get really kind of scared and, start to think about what you can do to protect yourself. And people just have to be very careful not to just sell some calls because you think the market's, going to start going down because, it doesn't take much to flip things around. There are some earnings coming out, so I'll be watching that as well. I have a small position in Gap, and that has earnings tonight. So we'll have to see. I know that Abercrombie got smoked when they had earnings. So we'll see what happens. And, just watching volume, today I feel like the market's getting a little bit tired of these 1-2% swings. I think that might be why we're starting to see volume dry up a little bit. Just because today, even though it's funny to say, well, volume's only going to hit about 60 million contracts today, but that's actually it's not as strong as I would think on a big sell-off day.
Kind of like we were saying earlier, the market may be getting a little bit used to these belly blows out here, listeners. Unfortunately, that music means we are done with the show. But you know what? If you need a little Uncle Mike in your life, you're saying, I'm not done with my Uncle Mike goodness, don't worry. He'll be joining me again in a little bit on TWIFO This Week in Futures Options. He could defend himself from the legion of folks who've been talking smack about his beloved silver. I can't count the number of folks who come on lately and said silver is just a big ball of crap. So he can respond to those folks. In the meantime, Uncle Mike, if folks want to reach out to you and tell you to your face that silver is a big ball of crap, where should they go? What should they do?
If someone really wants to tell me silver is a big ball of crap, you can contact me anytime. stcharleswealth.com if you're looking for a financial advisor who doesn't think that silver is a big ball of crap, among other things.
All right, stcharleswealth.com. To learn more on Mr. Flowmaster, sir, where should folks go if they too want to get hyped for the flow like you, sir?
Cboe.com/RMA. That's where we've got our risk and market analytics and data tools. You can request a trial, and you're always welcome to come poke around Cboe.com. Check out our new Bitcoin ETF index, which actually saw some pretty interesting action last week too.
Just be aware, listeners. You start poking around Cboe.com/RMA, you're going to get all hyped up like the Flowmaster. You won't be able to contain yourself either. That's just the risk when you go head on over to Cboe.com/RMA. It's a fun rabbit hole. I think you're going to like it. That's going to do it for us on the old OB. Back again in a little bit to talk about that big ball of crap that is silver and a whole bunch of other stuff coming up on TWIFO in a little bit. Will your favorite product make it on the show? You got to tune in to find out. And then, of course, back again tomorrow. Spoiler alert, there's a little bit of vol. There might be an appearance by your beloved Loggins on the old vol views tomorrow, so look forward to that. I do believe Dr. Vix is back from his global travels to Germania, So we'll hear about all of his international vol musings from that International Vol Summit as well. Should be a good time. And then we're back one final time exclusively for you pro folks to talk the weird, the wild, the wondrous paper over there on Options Oddities. Only one place to get your hands on that, theoptionsinsider.com/pro. Then I'm heading down to the Futures Industry Association Expo next week. But don't worry, we still will have our usual allotment of shows. So I will see you back here on Monday for a little bit of the old Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.